As summer winds down and meeting rooms across the nation's capital prepare for a new wave of policy deliberations, one particular set of discussions is attracting its usual feverish speculation: the path forward for interest rates set by the Federal Reserve. At the center of this vigorous debate sits a familiar face: Atlanta Fed President Raphael Bostic, once again finding himself caught between dueling data points as he weighs whether to advocate for an interest rate cut at the central bank's upcoming September meeting. For those well-versed in the cadences of Fed speak, Bostic's recent remarks carried the familiar refrains: a delicate balance of economic projections filtered through a pragmatic policymaking lens. "I don't want us to be in a situation where we cut and then we have to raise rates again," Bostic cautioned at a recent event in Atlanta. An understandable sentiment echoing across American households still recovering from the last economic downturn. After all, financial whiplash serves no one's interests, least of all the very businesses and consumers the Fed is tasked with stewarding. And yet, Bostic finds himself once again navigating the ever-present conundrum faced by data-driven decision-makers across all sectors: the mercurial nature of projections in an era of unpredictable global forces. Just a few months ago, the Atlanta Fed president was endorsing a relatively hawkish policy stance, favoring just a single quarter-point rate cut by 2024 to hedge against economic headwinds. A prudent approach, to be sure, reflecting the conventional wisdom that the best policy pivots are usually modest ones. But now, as summer meets fall, the temperature seems to be changing. In Bostic's own words, his timeline for anticipated cuts had moved up after inflation fell more quickly than he expected and the unemployment rate increased more rapidly. A startling admission that the economic reality failed to match even the most studiously constructed forecasts. It's a scenario that will resonate deeply, I suspect, with any reader who has found themselves recalibrating expectations amid the relentless crush of new data points, updated projections, and shifting environmental factors. We have all been there, the careful plans appended, the studied assumptions laid bare by unruly events beyond our control. And so Bostic finds himself facing a fresh inflection point, forced to reevaluate his stance through the prism of new evidence. The coming months' reports on inflation and employment data now loom as important markers that could tip the scale toward endorsing a rate cut at the Fed's September policy meeting. A pivot that, not long ago, seemed unthinkable for the traditionally conservative policymaker. It's a fascinating glimpse into the high-stakes world of economic stewardship, where even the most seasoned experts find themselves continuously updating their mental models based on the latest tranches of evidence. A world where overconfidence is a professional liability and humility before the data a prized virtue. But Bostic's public ruminations also reveal something deeper about the nature of data-driven decision-making itself. For in this age of perpetual information flows, even the most robust analytical models can be upended by unforeseen events and unpredictable variables. Certainties prove fleeting, best-laid plans merely opening gambits awaiting new waves of counter-evidence. It's enough to induce whiplash in even the most sure-footed policy expert. And perhaps that is part of the broader lesson here, that in our era of constant disruption, decisiveness and flexibility must coexist in careful disequilibrium. An insight with profound implications, not just for economic policy, but for any domain where decisions carry systemic consequences. After all, if even the analysts and policymakers at the Federal Reserve must continually reorient their outlooks, how much more agile must the rest of us strive to be? How zealously must we guard against the siren song of certainty and the perils of complacent inertia in our own lives and vocations? In this light, Bostic's evolving rate stance emerges as more than just a case study in monetary policy maneuverings. It becomes a parable of sorts about the hazards of overconfident forecasting in a world where premises are regularly upended by unruly events. A reminder that the wise leader today is not the unflinching ideologue, but the judicious pragmatist, continuously updating beliefs through the unblinking lens of new information and evidence. Of course, this endless cycle of data inputs and revised outlooks could easily become a Sisyphean treadmill leading nowhere. There is virtue in consistency and a well-grounded political philosophy, and the public calibration of Fed outlooks likely spawns more than its fair share of financial uncertainty and market volatility. But perhaps that is simply the price to pay for operating in an inherently unpredictable domain populated by highly intelligent professionals who understand the limits of their own projections. Better to continuously course-correct in pursuit of clearly defined policy objectives than careen heedlessly into avoidable crises driven by stubbornly anchored assumptions. In this light, Bostic's evolving positions tell a broader story, one that implicates all of us navigating the choppy currents of an increasingly nonlinear world. For in this turbulent era, even the mightiest edifices of economic policy rest on pillars of humility and intellectual flexibility. New data portends new decisions, and the effective leader embraces the churning reality with open eyes and an open mind. It's a sobering but ultimately empowering ethos, one that demands we shed the illusion of perfect foresight and simply make the best decisions we can with the incomplete information sets available to us. Then watch, analyze, update our positions, and pivot anew as the next wave of reality crashes over the bulwarks of our prior assumptions. It's a mindset Bostic and his Federal Reserve colleagues have embraced with philosophical resolve, even as market makers and households alike anxiously await each reverberating policy signal. And it is a disposition, I would argue, that could serve us all well as we each navigate our own professional and personal seas of uncertainty. For in today's world, the only sustainable stance is one of perpetual revision, a humble recalibration etched into the very fabric of our outlooks and operational models. The details and data points will forever be in flux, but the underlying humility must remain a fixed point of departure. From that foundational posture of contingency, all bold decisions and calculated risks may safely flow. So as the Fed's September meeting looms, and the nation's keen economic observers once again train their sights on the latest litany of prognostications and policy pivots, we would be wise to explore the deeper layers. For buried beneath the monetary policy minutiae and recitations of inflation statistics lies a masterclass in one of the modern era's most indispensable mindsets, the enlightened embrace of perpetual revision grounded in evidential fealty. Whether installing rate cuts or resetting the course of one's own personal endeavors, the overarching ethos is the same. Gather the best available information, formulate your positions, but then remain open to updating those stances as new information flows incessantly in. It's less a glimpse into central banking sacrosanct rituals than a study in one of the modern era's most imperative disciplines, the high art of navigating a radically uncertain world. And ultimately, that is the great skill and underrated wisdom Bostic and his Fed colleagues have been modeling for the rest of us all along. Not some static rulebook for infinitely complex financial markets, but a philosophical blueprint for thriving amidst perpetual upheaval. Update, recalibrate, adapt. Then update again when the next gust arrives to buffet even our most considered stances. It's the only path forward for any of us hoping to maintain our footing on the constantly shifting terrain of the 21st century landscape. Abandon certainty, they beckon us. Embrace the interminable scrutiny of our most steadfast positions. For in a world this riotously unpredictable, flexibility and a studious deference to new evidence may be the only defensible orthodoxies remaining.